everyone, welcome to Fearfully Greedy. In today's episode, I will just tell you why I just doubled the position on Naked Wines, something I maybe have promised myself not to do. I will tell you a few reasons why I did. So I bought these 4,000 and 1,500 shares, in total 5,500 shares for a total amount of 2,100 euros. The portfolio at the moment sits like this, so 38% of it is Warrior Met Coal, 19% is Carvana, almost 14% is PAX, 13% is Naked Wines, 7.3% is Baba, Naga Corp, the the casino is 4.5%, and Ra International is pretty much the rest. There's a position needing to be adjusted to zero, but that's for another video. Okay. If you want to keep track of the portfolio, there's always a link to the Google Sheet in the description, which is always updated. Let's go to why I did this. So if you see Naked Wines, I started buying late 2021 at much higher prices around 600, 700 GBX, so that's £7 at the time. And today the stock, well, today is a bit higher, but the stock is sitting at around 30 GBX, so like 30 pence. So the first point is why I bought this price or yeah, valuation at the moment. I wanted to do like now and then at every time I bought what data I had. I cannot put everything from all the reports here, but this gives you kind of a glimpse onto what really is happening. If you see October 2021, there were a bit less than 900,000 angels across the three regions, which are Australia, UK, and US, in reverse order. So biggest is US, second biggest is UK, third biggest is Australia, and revenues were 340 million pounds. Okay, at the time. Valuation was at that time when I bought, which was already going down, was 500 million pounds. I bought 620 shares at that valuation. Then on January 2022, they were already at 950k angels, but revenues were flattish and the valuation was slightly starting to fall. So I was already buying at like 600 GBX and I bought 280 shares. On March 2022, the angels were the same because we had no new data, but the valuation had fallen to 320 million pounds, and I bought 190, okay, which at the time was significant amounts to the current position. But as the valuation kept going down, so 3 months later, in June 2022, 964,000 angels, so we had a new report, 350 million in revenues, 124 million valuation. That's because profitability was a concern, liquidity was a concern. Also, growth had stalled, like had kind of stopped at that point. But yeah, at that point on June, I bought 660 shares, which was not a double, but almost, okay. And in between all of these shares, it was a bit less than 2,000 shares, like 1,750 shares. Same year, 3 months later, no new reports, so 964,000 angels, as far as I knew at the time, 350 million revenues. The valuation had fallen more, like 30% more, down to 80 million pounds valuation. And I bought a lot, so I bought much more at a much lower price. So I bought 4,250 shares, which I paid much less for these shares. Okay. Next, I bought now. So this is the recent buy, which is 5,500 shares, which with the new numbers. So it's 870,000 angels, 350 million in revenues, but the guidance is a bit lower. So they expect like 300 million pounds as revenues and Angels, they didn't give a guidance, but they make an educated guess, which would be around 700, 650,000 angels. I don't think that's worth 20 million. I don't think business change valuation so much. Like not some like let's give the usual example. If you have a gas station in your town, and 1 year there's a 1 year it's going great. You are selling 10% more gas than last year, and someone offers you like I don't know 15 times those earnings. Probably for a gas station not, but maybe 7 times, whatever. Uh, and then there's a recession, and that year you start selling not half, but there's a recession, but you start selling maybe 60% or 70% the usual gas you were selling that growth year. Will you sell it for one time earnings or two times earnings? I don't think you will sell it for, if it was half a million or a million, whatever you want to number it. You won't sell it for 100K just because there was a tough year. Well, the expectation is that this is worth nothing. I think that's what the expectation is. I don't agree. So the next thing that why I bought in is because there's a change of CEO. And I don't hate on Nick Devlin, but I think the change is needed. The results were showing, and now Rowan Grumley, the founder, has become the chairman and will be the executive chairman, so running things for a bit until they find a successor. I think that's needed. Ron Grumley ran the business for 12 years, from the start to 12 years. Then Nick was appointed, and he was very happy with Nick. I liked Nick, just the results didn't show, and I don't think it's a business actually. I think it's an execution error. And Rowan is a like he's a very how would they say? He's a very like himself is a great person for to run a business. He was the founder of uh, Naked Capital. No, what's the name? Well, he founded something with Richard Branson, like from Virgin Capital, I think it was. He was also the founder there. He's a legend, Rowan Grumley. So I don't think he will let someone just take this from him. He only owns like 3% of the company at the moment, but I don't know. I don't think he will let this go bust. So the change of CEO, positive thing. The insiders are kind of buying. Rowan has bought some, just 38,000 pounds at the moment, but it moved from 2.1 million shares that he has. Now he has 2 point almost 3. So yeah, it's well at these prices, anything moves the needle quite a bit. It moved 0.1%, like his ownership of the business. At some point, I might have to calculate what percentage I own of Naked. Uh, I will need more capital still. But yeah, then we have James Crawford, who bought 23,000 pounds, 80,000 shares, and then Stephen Bolton. James Crawford is the CFO, and Stephen Bolton was the previous chairman. So they are all buying, and probably we'll see more buys in the next days. Maybe not. Maybe there were just shock buys, but it's not a big amount of money, so that I expect them to maybe buy more. And it's not a big amount of money, but no one likes to lose like 30K or 28K or 11K. Like no one likes that. So insiders are buying. Is it a big signal? No, it's some signal. Then I don't think Naked is going broke. If we know the model, they have subscribers, angels, with 100,000 in Australia, 300,000 in the UK, 300,000 in the USA, more or less. Like we don't know exactly what number we have at the moment. They get this money because each one like $40 Australian dollars in Australia, $40 in the US, and 25 pounds in the UK. This translates to roughly like 24 million dollars every month. Of course, they have to keep wine in exchange, and these funds are not theirs. Like if you see, they see it as deferred income in the balance sheet, but they have cash coming in and interested clients. So I don't think that's going to happen. Inventory size versus valuation is also quite ridiculous. At the moment, we know the exact number today, but last time we know it was 166 million pounds in wine, and this is like inventory pounds, so not sales, but it's the rough valuation they think it has. Well, the company is selling at 20 million, now maybe 30 million, but unless this wine is worth nothing, which I know it's not. So I cannot know, but I know it's not worth zero. Okay, so the misprice here is extreme. Uh, I do think also same as Grumley. Grumley pointed like Nick as he was like his son, but he now has, well, they have caught him. They think he thinks it's an execution error. I also think it's an execution error, and he gives most of the why this happened is because Nick was the U.S. president and also the CEO, and maybe he should have just been U.S. president and someone else running things as CEO. We'll see who they appoint, but I was just checking with the different websites for Naked, and I saw this in the US. And if you know the model is that they have these subscribers, angels, who want to found independent winemakers and get their wine directly to them. And I don't think you get them with just, yes, we give you free money, take this voucher. I understand the voucher gets a lot of clicks, like $100, £100 or $100 free wine. Sure, click, 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 click. Get a lot of mails in, and most of them we shed, but we got a lot of volume in. We can buy more wine. Sure, but how do you know if you are finding the quality customer that we actually want? Also, online, Naked has a very good like trust pilot and a good presence online, but he has like 5 stars everywhere, minus everyone that says that they don't understand why they are charged $40 a month. So imagine someone that signed up for your service and they don't know what you signed it for. So I'm not a marketing guru or anything, but people that get into your service, they should know what they get into. If they don't know, it's that you're signing the wrong people. Okay, it's volumes. Maybe I'm completely wrong, and yeah, they should do more of this. But I don't think you get the clients you want this way. So if we want the high quality customer, we shouldn't be doing this. That's what I think. Uh, this the model. Like there's a winemaker, there's you naked in the wines makes it possible. They fund the winemaker, they buy everything from him. He makes the wines that he wants without having to think about brand, marketing, distribution, logistics, all of that. He makes the wine he wants, and they serve the final customer. The model is very elegant. No middleman here making all the dollars and making your wine so much more expensive. Could we find these customers telling them the wine is top tier of the market or same as the market, let's say, but they pay less for it? And it's because most of that money goes to the winemaker, so the winemaker kind of makes more, and no one in the middle makes that. I've seen some ads and they try to explain that, but I don't know about the voucher. But in the end, it's an execution error. I'm not the one getting paid to think this through, but someone was. Uh, then another reason I bought is because with just 2,120 euros, I could virtually double the position. All these shares here that costed me 13,700 euros, they were 6,000 shares, and this is 5,500. So that's another reason I bought. I changed hugely the price I paid for these shares with this buy. Well, I didn't change the price, but my break-even price is lower. Then I do still think the opportunity is so big. 25 billion market, 20 of which are in the US. The US is very inefficient. It makes no sense. People can't. Well, they work in this model, which is just, yeah, it's ushering cash into the system, but that cash rarely gets into the wine. It just gets into the distribution. So I think the market is so big. I think someone can still refloat this company. They can find those customers. They might need to change a lot of things. They might need to shrink the business, but shrinking is not a problem. They could shrink to 100 million revenues if they had the good customer and grow from there, and the valuation is still okay. I don't think that's what's happening, but what I mean is that at this price, at 20 million or 30 million pounds for the company, the opportunity is just ridiculous. So, and that's why I bought. Will I be mistaken? I don't know. Okay. Well, we'll see you in the next one. I think I will do every 2 weeks. Top three, top five companies I found during those days, together with some updates on the companies of the portfolio. And I think that will be the channel for now. Every week is kind of the amount of time it takes me to make the video to the amount of time I have to do research is too big. Like I'm wasting too much time on just doing the video. If I add double the research with the same amount to make the video, I think it's a better deal for me. Okay, well, everyone be safe, take care, bye bye.